Good evening, everybody. It's exciting to see this room so full. My name is Anna. I'm a solutions architect at Stripe. My main role is to speak with users of Stripe, like yourself, and trying to solve problems together. And today I'd like to speak a little bit, it's a very different topic, by the way, on how Stripe is tackling crypto, especially stablecoins, and what you can do and you can leverage with our ecosystem to start taking advantage of blockchain rails for payments and money movement. I'd like to start with a little bit of background on where we are at, and a little bit as well of debunking some of the myths and fears around crypto and especially stablecoins. So I'll start with a story. In 1661, the Swedish government decided that instead of paying their merchants with gold, they would start to issue banknotes. The merchants weren't very happy. In fact, they didn't trust at all this new method, to the point that for each note that they would get, they would require 16 signatories of high officials, which you can see how cumbersome this is. It wasn't until the government decided that they would actually redeem those banknotes for precious metals that people started trusting and thinking that, well, maybe it's better to carry the paper instead of carrying the gold from one point to another if they have to buy or do some commercial exchanges. In fact, after that move, the banknotes became quite successful in Europe, and everybody started issuing banknotes left and right. And the truth is that it was a little bit of the Wild West, because not everybody was how would it say, trusting party. And nobody was able to certify, or was not easy to see if somebody was giving you a note that was actually legit or not. In fact, there were a lot of counterfeits as well. In the long run, as time came by and the government started to get involved and regulation came into place, these banknotes become the way governments and countries actually exchange value, and they're the way we have now, until very recently, until digital money was here, exchanged. All this story just to say that when you look at stable coins or you look at cryptocurrency in general, it's nothing else than a token, a way of exchange value that is in some way certified by a issuer. And as such, is as valuable or as credible as I would say, the nature or credibility of the issuer itself. And this is important because when you see cryptocurrency or you see stable coins, especially for stable coins, we've tried to bring into this cryptocurrency, new technology, blockchain, the credibility that the old fiat world had. And let me explain you how. So we have the old world. I call it old world because hopefully it will come old. I'm gonna give it with dollars because that's the most common, basically, stable coin. So you can buy, exchange, trade with dollars. Dollars are basically issued by the Fed and guaranteed by the Fed with certain conditions. And the way you trade this or the way you move money, it's not easy. It's being monopolized by basically banks that hold the power to control the flows. And it has to be through specifically rails or methods, like it could be a wire, it could be ACH, it could be Visa, but basically methods that are networks of actually exchanging information by which you are saying that an amount of money has moved from one place to another, that's all. And unfortunately, the same people that have built these rails are taking advantage of the slowness of this rail. So they have no interest, no incentive to actually go and improve them. Let's go to the new world. The new world is a world where instead of just dollars, you have dollars issued by a tech company that's being regulated, like for instance in this case is Circle, so USDC. They can move as tokens on any blockchain that you choose. And actually, the blockchain is going to tell you how fast it is, but definitely faster than actually moving money through a bank rails. And the control is more distributed. So that's not on a single node, a single place that you actually are holding the money after it's passing to the next node. It's actually a network that is informed immediately that the transaction has happened. And the smart contracts, anything that you do in terms of additional commercial contracts can happen on the blockchain itself. And what is interesting about USDC is that we have to understand that what they've done with stablecoins is they've decided to peg, or actually to back with capital, whatever tokens that you are actually moving on the blockchain with real capital. Think a little bit like what we were doing with gold until 1970s. So before, you would actually have notes that were backed by gold. Now we have tokens and motion of tokens, in this case, so USDC, moving around, backed by real capital, money standing somewhere in a bank. That's what happens. That's basically a guarantor of the system. These capitals become the guarantor of the system. And that's why it becomes a real way to actually officially move real money, fiat money, but on a different rails that is going faster. Why is this becoming interesting? I mean, stablecoins have been around for 5 years, but let's put it this way. The average person on the street wouldn't actually even consider using stablecoins because cryptocurrency in general has a reputation of being volatile, of being a risky business, of being complicated. And not until recently, where governments started looking into it as a way of having some leverage on moving money faster, especially with the Genius Act in the States and with the regulation in the European Union with MiCA. It's when they started to put a framework around this. And this framework is a set of rules and regulations that all these stablecoin companies have to follow to have additional guarantees and to let consumers feel a little bit more confident about this. So at this stage, we are in the conversion of 3 things, fundamentally. First, blockchain is no longer an incipient technology. It's been around for 10 years. We know the good, the bad, and the ugly about it. So we can actually start building on top of it with confidence. Second, there is regulation, as I just mentioned. So that brings a framework. And third, as soon as you regulate and you bring your framework, more official partners, like more consolidated companies, more institutions starting to look into it for their own business. And what it means is that it starts growing exponentially, and it's always the same. Money movement is about networking. You need to build a network. So as more people use it, it becomes more valuable and easier to use. And just to give you an example, this is from 2 years ago. This is a graph telling you stablecoin transaction volume. But if I give you the data from last year, basically you'll see was the circle one. So USDC, they had 18.5 trillion in transactions last year. And there is an estimation, because it can only be an estimation, that the overall volume of transactions on all stablecoins on 2025, it was around from 36 trillion to 45 trillion. That's a lot of money that has been moving just basically in transactions on stablecoins. And it's continuous. Basically, people are adopting more and more. It's taking this like the stick shape of adoption. And why are companies, institutions, people started looking into this seriously? For all these reasons. The first one is fast. Money, when it moves, as I mentioned, in the old world, it doesn't settle fast. However, with stablecoins, it's immediate. As soon as you do the transaction, as soon as you are guaranteed the money. The second one is, as a system, as a rails, well, it was designed globally. It's a technology, it's a blockchain that doesn't have borders. Whereas all the other systems were basically designed to support the intrinsic ecosystem within a country. And because of that, it's basically cross-border, borderless. FX is treated in a very different way, and it has advantages. And one of the advantages is that it's much more cost-effective, because it doesn't have all this friction, all these toll gates that you have to go through. And you also have the ability to actually have transactions that are much smaller, charged in a very reasonable way. And the last one, that I think is the one that is the most interesting for you guys, is that it is a system, an ecosystem that was from day one designed to be programmable. It's a tech piece that is available, and it was open source. So anybody could, in theory, start their own blockchain and create on top, because it's a system to actually interact in a distributed way. Not I'm saying that is easy, I'm just saying that you can. And precisely because it is not easy, one of the things Stripe decided to do is we basically are a tech company. We're a software company, we're a tech company. We do have partnerships with a lot of our banking peers, but we understand that the value that we give you is in facilitating and making things much simpler and much affordable in terms of development. So one of the first things we've done is understand that as nice as there are all these blockchains, most of those blockchains that were out there were not optimized to move money. They were optimized to do NFTs, to do other transactions, trading, speculation. And what happens is, because you are just a node or just a transaction in an ecosystem, you might actually have to pay a toll and wait. So a little bit like with banking. You move the money, but the banking priority is not to move your money, it's to make money out of your money. Well, blockchains have that problem too. So Stripe decided to invest with Paradigm on Tempo, which is a blockchain that is optimized and prioritized payments and money movement. On top of that, we acquired Bridge and Privy with the idea of getting the best in breed on how to articulate or orchestrate all this blockchain and being able to issue stable coins or any other coins, and as well as being able as well to do and create your own wallets. And why would you get these modules? Because in all honesty, despite the fact that it's open and it's easy, as in the recipe is there, doing wallets well, it's a difficult task. Wrapping wallets accordingly and giving you the APIs to create your wallets and have these all secured, it's really an asset. And the same for the orchestration on-ramp, off-ramp that Rich brings in. It's in per se difficult problems that have been resolved very elegantly through code and through APIs. And we wanted to bring this in the normal commercial fiat ecosystem. And that's what we've done. We've merged them. And on top of that, what you see is different use cases that you can cover. On the left, when you call banking use cases, this is basically the me-to-me holding money kind of scenarios. You can decide that you want to software that can allow your customers to do this kind of thing with the stable coins. And then the payment use cases that typically me to somebody else, what is like, commercial transactions that you're having with third parties, et cetera. So how you actually manage that when you're doing cross-border, or when you actually want to do acceptance of payment and settlement, immediate settlement. So this is the ecosystem that we've actually built. And in terms of specifics, it's one of each boxes is telling you what you could do with each of the companies. So on the left is more on the commercial side, money movement, payments, et cetera. Bridge its core, so it's more granular at the level of the blockchain, and specifically for the ability to actually have and leverage their license in stable coins to be able to issue your own, basically, stable coins if you're a large company, or if you want to do orchestration and et cetera on run-off-ramp. And then I was mentioning Privy is the ability to do very secured wallets. So the ability to hold it, but also the ability to encrypt them, decrypt them, give authorization, et cetera, which in the world of cryptocurrency is basically critical. So I'll give you a couple of scenarios of things that you can do already now on Stripe. So the first one is, because things go slowly in this world, Stripe allows all this out of the box in American accounts, we call them. Basically, they have to be a merchant in the United States. That doesn't mean that you cannot test it. You can go to Stripe, open a sandbox, set it up as a sandbox that is for an American entity, and you can start testing this. The evolution of stable coins will go with the evolution of regulation. So we started in the United States because it's where it's the most advanced. Certain things can be done in Europe, so from Ireland with no problem. And then the next one will be like the UK, if they decide to get the thing together and accept the stablecoins, which are still thinking about it. So, accepting payments. You are a developer. You have a shop in the United States and eventually here in Ireland. Why not to accept crypto? If you had to develop it yourself, it would be a pain. But with Stripe, you can basically have the typical checkout. You develop, this is just a basic payment button, so nothing very spectacular. And you can see here that we can adapt on the currency. Just put it in dollars. That will, you know this, or maybe you don't, but basically it's out of the box, no code, very simple to implement. Now you want to accept crypto. How do you do that? Exactly the same integration that you had today, or you have today. Eventually, in your dashboard in Stripe, and now in the States, it will show stablecoins and crypto as payment method. You will go, enable it. You come back here. You reload. And there it goes. That's it. As simple as that. We want to make it so accessible that you don't even have to worry about what is behind. And what this opens is typically, show you how it goes. A redirect. I mean, each wallet's a little bit different. Likely you do it from your mobile, etc. But from the sandbox, you will be able to test more or less what the experience could be. So let's say we accept crypto.com. That will be a simulation of how you actually access your wallet. Here, complete today's payment, and automatically, let's say approve. And eventually, I think, yes, we will. It just is basically simulation, but you can imagine that you will have access to your, and in your wallet, you might decide to do stable coins, or maybe convert immediately in the wallet from another crypto to stable coins and stable coins to the payment. From the perspective of the merchant, from yourself, that you are receiving money, you're developing this shop, what happens is that the transaction itself is seen as any other transaction. And we do one-to-one. So they pay with one stablecoin in USDC, but you're going to get £1. And it's going to tell you, the same. It's like seamless, exactly the same integration. You get the money as they pay. This is one scenario. Let's see the other scenario. Go back here. So that's accepting payments. The typical other typical scenarios is trying to get on ramp. That is, you've got dollars or euros, and you'd like to have stable coins or any kind of crypto. So one of the things that Stripe is trying to do is to bring cryptocurrency to mainstream, not to the more savvy in cryptocurrency that feel like they can risk, but also to expose it to the average person on the street. I don't know if you know Link. Link is our Stripe wallet. It's very extended to use. Basically, it's an easy one-click or wallet. And when you have your wallet in Link, it gives you the opportunity, especially in the States, to add other currencies. So through Link, through your wallet, you are able to now, from here, buy crypto. So what you would do, this is crypto.link.com, and you can try it yourself if you have a Link account. Personally, I can't because I live in London and doesn't allow me because I don't have the right to do it, but Europeans and Americans can buy crypto. And you can actually decide how much, what's the amount that you want to do. As I said, it could be euro. And then you can choose what you like to do. And in each one, you can decide to be basically a stable coin for whatever use you want, or you can decide to do any other any other coin in different rails. Again, super simple. This is basically for the people on the street, basic knowledge. For whatever reason, they think they can be paid faster with stable coins, or they have a use for that, or they want to send money in stable coins abroad. That's a very easy to use. Then there is the aspect of commercial on-ramp. So you're developing software, and you saw the use case in where we were getting money paid into our account, doing the transaction one-to-one to dollars. But let's imagine that for whatever reason you prefer to keep that money in stablecoins. That is possible as well. So Stripe, you know well, allows you to get money from payments, but now it also allows you, with what we call financial accounts, to keep money in the account as host money, not just payments that have to be paid out to your bank account. That money that you or your software earns through the ecosystem that you have can be passed and stored in Stripe for future use, to programmatically pay out. So you have here the ability to have dollars and the ability to have dollars in stablecoin, and decide to build either or those two balances. Why would you keep stablecoins? Maybe because your software has to pay out to, I don't know, creative industry, people that are in, I don't know, Argentina, or people that are in Philippines, and these people prefer to be paid in dollars, they prefer to pay in their local currency, and on top of that, when they're paid with stablecoins, they know they are paid immediately. So it's an edge for your business if you're actually using this kind of rails. And the final piece is when you pay out, how you pay out. So you're going to see that there is a big difference between costing and doing payouts with just the normal rails transfers, if you do international, the SWIFT, than actually doing the same with stablecoins. So let's go here. Let's take one of my recipients. I'm going to pay Laura Stefan. I'm going to just basically, by the way, I'm doing the demo on the dashboard so you can see it. But rest assured, every single step that I've done on the dashboard that you can see can be done programmatically. So you have the APIs behind to add recipients, to do the payouts, to actually make everything embeddable inside your software. That's the beauty. You can also do it from the dashboard, of course, but the idea is that we make it programmable because that's what the advantage of the technology is. So let's say that we want to, so this lady has the ability to be paid on the bank account here, or be paid onto a wallet that she's actually shared with us, an endpoint. So when you do a send payout, if you were sending, let's say, $10 to her onto the wallet, each transaction would cost you 55 cents. If you try to do the same thing, normal rails, 3 times more. So, because there's also sunk cost. When you are doing blockchain, it's normally proportional to the effort, and it's very little. With the regular rails, it's 3 times more expensive. It's also faster. With ACH, you have ACH next day. When you say now, that means now. In terms of cost, it tends to be more expensive when it's faster it is, basically. In the normal world, for blockchain, it's exactly the same. It's always the same way. And just because I wanted to speak about a real time and a real case, and just to finish my talk, I wanted to show you here the most typical case. This is a remittance case. This is basically the reason why stablecoins have picked up so much in the last years. So let's say that somebody lives in the United States and wants to send money to their family in South America. It's a typical case. In the upper side, you have Stripe basically sending money traditional way. That is maybe feasible when you want to send this money into locations where the recipient is happy or the government of that country is happy to receive the money in dollars. Not all countries allow to send money in dollars. The second branch, the branch that you see here, is actually a branch that is leveraging bridge and privy to be able to use the stable coins to send to the recipient onto the other side. It's sent cross-border, it's supported, and the person receives the money in stable coins. And it allows to actually have that person holding those stable coins to pay elsewhere. And as I was mentioning before, people from Argentina or other places in the world prefer to be paid in dollars. So this is a very typical case for those. I think that's all.